Good afternoon, everyone, and to kick us off this week, I'm going to be exploring the gold market and giving my opinion on where it could be heading for the rest of this month and February. And I love the timing of this video because price action has been stuttering since the turn of the new year, and we're shaping up for a really big move either way. And so in this video, I'm going to run through the fundamental events coming up, which is really going to decide the fate of where this commodity is going. And then I'm going to move on to the technicals. We're floating around the 1850s mark at the moment, and I'm going to make a case for every outcome of gold. So you do not want to miss this one, guys. Okay, so what do we need to look out for this month, and it will shape what's going into the February as well? Well, price of gold is stuttering at the moment, and the reason for this, believe it or not, is the $1.9 trillion stimulus package introduced by President Joe Biden earlier this month. And the reason price is stuttering because of it, because we are used to normally seeing markets react really sharply to the stimulus introduced by the US. Well, at the moment there are size and time concerns. The size concern is that there's been a counter proposal of a smaller plan which targets the COVID-19 vaccine distribution. And the concern around the time is that there is rumours that it could take 4 to 6 weeks to agree a deal and to pass the bill. And if this was to be the case, then we could see price of gold stutter or even drop on the short term before we gradually rise up to around 1900. And it is important to note, although Joe Biden is willing to negotiate with the Republicans on the package, the Democrat control of Congress could mean that we have a Democrat-only route that is taken, i.e. the 1.9 trillion stimulus package, and pretty sharpish as well. And this would make the rise in gold a lot more urgent. And what could be the deciding factor for gold going into this month and next month? Well, the fact that it will shape the price of gold, in my opinion, is the Federal Reserve's monthly rate decision, which is swiftly followed by the Federal Chair Jay Powell's conference. That's taking place tomorrow, on Wednesday. No change is expected in the rates that have been at 0% throughout the whole pandemic, but all eyes will be on what Mr. Powell has to say in his conference after, as always. What gold needs is a dramatic macro environment to spark some bullish activity, and we should all be listening out to what he says and what his thoughts are on the stimulus package, as any clues he gives is likely to cause a reaction in the market. And finally, one I want to go over is what I like to call the battle of investment flows. So where investment flows are going at the moment, and we have the price of Bitcoin, which is in all our lives at the moment. It's everywhere. There's a big hype around cryptocurrency. Bitcoin's price is said to exceed $50,000 over the longer term. And at the moment, Bitcoin is winning the battle of investment flows. So normally investment flows would be flowing into gold. But we're seeing the hype around cryptocurrency and it's flying into Bitcoin. So this is the reason that gold hasn't reacted as much to the stimulus measures. And there's good evidence actually to suggest that Bitcoin will keep stealing this investment flow from gold in the near future as the hype continues around social media about cryptocurrency. Okay, so let's have a look at the technicals now on the chart, and I'll start on the daily time frame. I'll go down to the 4 hour and then to the 1 hour because we aren't looking at a yearly overview, we're looking more at a monthly overview. And what I can see straight away is that we are in this descending channel for gold at the moment, believe it or not. And you can see this stutter in price action over really this whole month. And what I find really interesting was we are in fair value of this channel. And so there really is a case for either a spring up to the top end of the channel at 1900-ish or a spring down to test 1800. And it really will be the fundamentals that determine this. But from a technical side, if I just delete that, what I would like to see price do is first of all, fill this price inefficiency. Now, if we could see price fill up to here, I would expect a natural reaction down. And the level I like to buy for gold, which would be really discount level for me, would be this daily order block here, or this daily key level, should I say. It's around 1780. If I go will take a lot for price to drop below this. And I've done a video earlier in the month about gold and how we are bullish overall, and that doesn't change. The factors I spoke about in the PowerPoint are short-term factors, but overall we still are bullish for gold. So if price was to have a short-term drop, and we could bounce out of this key daily level around 1780, I'll be targeting first of all 1900 again, which coincides with our price and efficiency gap. So a test up to 1900, which I'll mark as TP1. And then really, if you're brave enough, you could hold to all-time highs, which obviously will take a while, but somewhere I do think it will reach again. TP2 somewhere up here. And if I draw on that long position for you, if price was to reach this key daily level, what this trade would return, and it'd be around a 10R trade, which would be really, really nice, and probably could refine that even further. But the key thing here is to wait for price to reach this level, have patience, have it marked out. Once you've marked it out, which took me all of 1 minute, you can wait and just be patient on it. So that's what I'm seeing on the daily chart. And if I move down onto the 4-hour chart now, let's see what we can see here. Well, I'll zoom in. You can see from this market structure right now that we have these lows which we've had multiple wicks. And I would say that this here was the market structure low. It's taken a very, very similar pattern to silver as well. And what we've had is we've had this threat of a break of structure to the downside, and it's wicked straight back in, which is a bullish sign. This is a liquidity grab, which I've gone through before. It's where the big institutions, the big players in the markets generate enough liquidity they take stops out from retail traders, generate enough liquidity, and then they go off in the other direction. So this is a bullish sign for me. That would have been a nice buy entry around here. I'll just mark it with a dollar sign to show a grab of liquidity. So I'm saying on the 4-hour chart that although we're still floating around the 1850s, and this stutter in price action will be evident throughout all time frames, this is a bullish sign. And so I believe that if the fundamentals can align, if the stimulus package goes through, depending on what the federal chair says tomorrow, then we could be looking for some nice buys here as well. And then let's have a look at the 1 hour, and I think it's going to be quite messy on the 1 hour. So we might, as you can see, this is the price action we have. You can't take too much from here. Here is the liquidity grab that we had on the 4 hour. Nice bullish sign. We had a break of structure up here. You can see this break here, and now again we're just floating around 1850, and a level that I'd be looking to buy from potentially, which could be seen as a nice support level, is this level here. If price could run into this level, which is at around 1845, it's not too far away. We could have a more of a scalping opportunity, because as we know, we're trading on the 1 hour. It's not as accurate, but it can be some nice scalping opportunities here. Other than that, guys, again, if the fundamentals align, which I've said a lot, but it is really true for the gold market at the moment, then we could see a rally up to 1875, which would be my target for TP, take profit, for any trades on the 1 hour chart. And again, if I just mark out the position for you, looking at around 3.5R. What I'll really quickly do is just show you the power of refining. So we have this 1 hour level here. Can we refine it even further? So let's go all the way down to the 5 minute. So here's that 1 hour level, which is still marked. Look, you can see straight away we can actually refine this even further to a nice, a much better RR ratio with this trade. And if we was to have that level, then the trade would go from 3.75R to around 15R. So this would be my scalping opportunity. That level is actually at 1840, so watch out for that one, guys. Other than that, it is really important that we understand that what the federal chair says over the next few days and what happens with the $1.9 trillion stimulus package over the next few months is really going to determine what way this gold market goes. So for me at the moment, I am neutral to bearish in the short term and bullish in the long term. And that is it for today, guys. I hope you enjoyed this video. If you could subscribe to this video, that would be great, and drop any comments that you have in the comments section, or you can message me on my Instagram above me. I'll be happy to help. Other than that, guys, keep liking and even share this video with anyone who you think would enjoy it. And I'll see you all on Thursday for the next video. Thank you.